now we're at a point where the market is betting on rate cuts in the near future. There is that disconnect between what the market is betting on and what the central bank is communicating to the markets. What's the risk coming from that disconnect?
I think this is a common problem in other advanced economies, especially in the United States and us. You know, we paused our interest rate in the last two meetings because we have increased our interest rate by 300 BP in 1.5 years, very fast in phase. And we think it's the right time for us to kind of assess what is the accumulated impact of this rapid interest increase. But at the same time, we made it clear that given that our core inflation is still well above our target, and then our inflation is now, we have a good news that our inflation is now going below 4%, 3.7% in April. So it's going down. But still, I think given that it's above the target, we have to wait and see. And then, it will be probably a little bit premature to talk about the pivot at this moment.
It is premature, but when you come to that decision to pause just a few months ago, you also need to think about the repercussions for the markets when you actually end up going for that 25 basis points that you said that some members of the board are actually comfortable with or are thinking about. So what do you say to that? Maybe the market does have a good reason to bet on a rate cut down the road rather than another hike from this level.
I think it should really depends on the data. And also, unfortunately, we have to also look at the monetary policy in other advanced economies. I think overall and globally, inflation seems to be peaked. But on the other hand, as you mentioned, core inflation seems to be very sticky. So we cannot exclude the possibility that, for example, we are waiting for the decision in this Wednesday by the U.S. Fed and the ECB's decision. So probably there may be another few rounds of the rate increase. But I think the rate tightening cycle in advanced economies seems to be close to the end. And also, we are not expecting that, given financial stability issues, we are not expecting that advanced economies can continue to the rapid interest hike as they have done in last year. So overall, I think what we are looking for is our essentially exchange rate and financial market reaction to the advanced economy decision down the road, for example, next week. And then we have to also monitor our real estate sector and then also our economic growth. So many things depends on the data coming from now on.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.